Welcome back to Inside Sources. This week, we are dealing and we are digging deep, delving into the issue of fuel subsidy in Nigeria and the impact that the Dangote refinery might have on the situation. And to discuss this with me, I have two eminent Nigerian journalists and practitioners in the relevant industry. I have joining us from London, Mr. Hector Igbiquibo. Hector, you are welcome to Inside Sources.
Thanks for having me.
Okay. And also we have the publisher of Nairametrics, who is also an active player in the sector, Mr. Ugochukwu Obichukwu. Ugo, you are welcome to Inside Sources today.
Thanks for having me.
All right, thank you. So let's start with Hector. Now, Mr. Dangote has been quite outspoken on some of the challenges and the seeming pushback that he had, you know, when he was building the refinery. He actually did say last week in the Bahamas at the Afrexim AGM that he had a lot of pushback from Western financial institutions and also from the Saudis, you know, who felt that he couldn't put it up. What's your take on that?
Well, my take is petroleum subsidy has become a conundrum. Yeah. So if you have someone who wakes up one morning and decides to build the largest single train refinery in the world, it challenges whatever stories they've been peddling. NNPC alone in the last 10 years or thereabouts has spent over $12 billion doing turnaround maintenance on its refineries, and yet cannot produce a liter of petrol. But someone comes along, a single individual, and he has built the largest single train refinery. So what do you expect these people to do? So speaking specifically to what Dangote has to say, it should boggle the mind. It should make you ask questions. You know, how come nobody at the NNPC is being held to account for money spent on turnaround maintenance? How come after building such a refinery, like the Dangote refinery, Dangote talks about importing crude oil
very important
to Nigeria,
very important,
to refine?
Yeah, you know, Hector, thank you so much.
How come we have to deal with that?
We're going to deal, we're getting there, you know, just so we take it one by one. Thank you for the opening comments. So I go to Ugo. So still on that interview that Mr. Dangote had at the Afrexim, he actually mentioned that when he was at the earlier stage of building the refinery, he had a call from, I think Mr. Fali said, who was the Saudi Minister for Energy and Oil, who said to him that I heard that you are building, you know, this refinery. Has came according to Dangote that, you know, what's the capacity? He says it's 650,000, and then the guy said to him that his advice to him is not to do it. So just to put the question to you also, Ugo, what's your take about some of those resistance that Mr. Dangote talked about, and what's the significance of this? Ugo, please.
One of the things that really got my own attention in his interview with the lady from, I think it was CNN, was a statement that he made. And he said clearly that, look, how it come Africa hasn't had a refinery in about 35 years or so. Africa hasn't been able to develop a new refinery. And it's suggesting that maybe it sort of favors Western governments or foreign countries to have Africa remain the dumping yard or maybe the major importer of petroleum products. Of course, you know, you also have to juxtapose it with the fact that Africa actually has most of the, crude oil deposits globally. But I kind of look at it differently, and Laolo. To me, we always have to remember that global trade is all about exports and imports, all about trade balance. Every country around the world is trying to have a positive trade balance. And to that extent, we're in a very competitive world. And so if African leaders don't understand that capital market or the global market economy is all about competition, and when you're in a world where competition is what determines who wins, nobody's going to come and tell you what to do. Nobody's going to give you a sound advice, in quote, or nobody's going to wait for you to develop your own capacity. So you have to develop your capacity yourself. And that is the mindset change that African leaders need to have. And I guess that's probably what Dangote is also trying to say. You're not going to expect Western leaders to fund you to build a refinery. Where would they export their own petroleum products to? They're not going to export it anywhere. They want to export to you. So what is important is that you should build your own capacity so that you can meet your own domestic consumption, and then you're also able to export. That is what is very important here, and that's the message for me.
Thank you very much. All right. So let's take it. Let's take the issue up. Let me go to Hector now. So the question of what is going to be the significance and the impact of a local refinery in Nigeria, and to the issue that I think Ugo had mentioned, that now, so are we going to have is there going to be a supply of local crude? What do you think is going to happen, Hector? And what I wanted you to do, based on your own knowledge of how the industry and the system operates, can we have some kind of a prognosis of the impact that a local refinery, a private refinery, might have in terms of offering some solace to the Nigerian consumers? Hector.
In terms of supplies, perhaps we can benefit from the elimination of cost of freight on international waters. You may recall that the last time we spoke, I told you I've been covering energy now for almost 30 years, and I do not recall us having a coherent energy security strategy as a country. Now, the whole essence of having the NNPC refineries was to guarantee some element of energy security. Now, if we say, oh, well, we now have the Dangote refinery, the Dangote refinery doesn't belong to the states. The NNPC took up a 20% equity stake in the Dangote refinery. I will expect that you're going to have a more enduring arrangement with the Dangote refinery that addresses our national energy security needs. But such a national energy security strategy mustn't be limited to just supply and distribution of petroleum products. It has to be broader than that. An energy security strategy needs to look at the whole gamut of energy, security, supply, distribution, and stuff like that. But when you don't have one, you now resort to ad hoc approach to energy security, and that wouldn't wash. Today you have the Tinubu administration. Tomorrow you're going to probably have the Laolu administration, or the Ugo administration, or the Hector administration, and we come up with our own idea of what constitutes energy security. If you have refineries, those refineries should work. If you have, you introduce the element of what they call this other stuff, CNG-powered vehicles, there has to be a coherent strategy in that regard. So today you have the Dangote refinery. The question we should be asking is, what is the plan in place to ensure that the Dangote refinery gets a steady stream from the 445,000 barrels a day that the NNPC gets for domestic refining, especially in the light of the reality that the NNPC refineries are not working. So there has to be an arrangement that sees us as a people, as a country, secure energy supplies. We shouldn't be hearing that the Dangote refinery is importing crude from the United States. So there's a limit to which I can speak to the impact, especially since we do not have a coherent energy security strategy in place.
Okay, thank you, Hector. Ugo, let me take it to you. What's your take, in terms of what you see happening or what ought to happen?
Okay, I think, I tend to agree with Hector largely. But here's something that I also tell people when I get asked this question. They say, "Oh, look, with the refinery on board, petrol prices are likely going to be cheaper. Subsidy will be completely eliminated. Maybe perhaps a lot of the high costs that we're seeing in the current pricing regime reduced." To a large extent, some of those things are probably true, but it's a bit difficult to predict. This is a privately owned refinery, and to that extent, you don't expect the man to charge at any subsidized rates. He would definitely charge his full cost so that he can recover. Now, let's also remember that as much as the refinery is local, most of the input cost for that refinery is still going to be imported, whether it's the personnel that will be servicing the refinery, whether it's the spare parts that will often be replaced and serviced, even the crude itself, like Hector just mentioned, is also being imported. And so a lot of the breakdown of its cost still has foreign components in there. And so it's quite unlikely that you might see a substantial amount of savings to the end consumer. Nevertheless, even if we get a 5 to 10% savings, it's still better than what we currently have.
Interesting. And we are coming to the issue of subsidy, but just one more thing before we come to that. I wanted to ask, and I'll start with Hector. So Dangote has been able to build this big refinery. I think it said at around $5 billion or thereabout, Now, and we've had, as a government and a people, to what you said, a social contract in which, government government had its own refineries and NNPC and all of that. We couldn't fix the refineries for donkey years. Somebody has built a refinery in record time, I imagine. Therefore, I want to put it to you, and I'm going to start with Hector, and then I'll go to Ugo. Do you think the idea of privatizing the refineries is a good idea if you look at what Dangote has done? Or what will you say to the idea of how do we make these things truly effective? If Dangote has been able to build a refinery and we couldn't even maintain 4 refineries for decades, does that bring back the issue of whether we should actually privatize this thing? I'll start with you, Hector, and I go to Ugo.
When you privatize, the entity that has bought it does not owe you social services per se. They owe their shareholders. They are set up to make profits. They are not set up to ensure you get petroleum products easily wherever it is you may reside. So we need to have coherence. We need to have clarity. But now, talking about ensuring that the refineries work, we need to ensure accountability. How we do that, if we have to commercialize, if we have to have some measure of government ownership and some measure of private sector participation, whatever it is we can do to ensure that there is some social contracts, then we have to go down that path. I can't sit here and tell you, yes, let's privatize. We've had some government-owned entities turned over to private sector players, and nothing came out of it. I'm well aware of the billions of dollars sunk into Ajokuta. Ajokuta has since gone to Solgas, gone to the Indians, and it is still what it is. We know of the fate of the aluminium smelter plant in Ikodabasi. Nothing has come out of that. So we now say, oh, yeah, sure, the refineries, NNPC has not been able to manage it, let's privatize it. We privatize it, and you now have asset stripping. If you've sold, you've sold. Let's not forget that Daily Times was sold. What has come out of it? Where is Daily Times and its assets today? So I can go on and on and on and on about the downside of privatization. But when you deal with national assets, such as the refineries, you're not talking about peanuts here. Where is Int'l today? It was privatized. Let's not forget that. So when we say privatize, is it the same way we've privatized these other entities? That is a big question mark. We need to address that. That's why you hear me talk about accountability. We need to begin to hold people accountable. That's the starting point. The monies that have been sunk into the revamp of the refineries, the turnaround maintenance carried out, what has happened to those monies? We need to address that. Last year, we had the petroleum minister, Heineken Lopobiri, grant an interview saying the Port Harcourt refinery will be up and running by December. This is June. He's not being held to account. What has happened to that? We can't expect that suddenly when we privatize, privatization isn't a magic wand. That wouldn't help the situation. The problem is worse than you can imagine.
Thank you, Hector. And I like the point about accountability and what you have said about the energy security. And I'd like to also say that, of course, the NNPC management, they can have their right of reply on your comment anytime this platform is open to them. So let's go to Ugo. Ugo, the same question. What do you think about privatization of refineries?
I think that a lot of their focus should be around setting the right policies and regulations to allow real businessmen run business the right way. And that's really the key thing here, real businessmen running business the right way. Some of the privatization challenges that we've had over the past or in years come have basically been about two things. Two, one is the capacity or the personality of the people that we hand over government assets to. And then two, perhaps the most important, is capital, access to capital. So businessmen that don't have access to capital, either because of their pedigree or their personalities or their antecedents or their capacity to actually access capital, often fail with privatized institutions. So if you go back and check even some of the companies that he's listed, what tends to happen is that these guys, approach banks, get funding from the banks, buy these assets, but expect these assets to still generate the revenues that is required to repay the bank loans and also reinvest into this asset. It doesn't really work like that. It doesn't work like that, at least for most assets. So most assets require that you actually raise equity to buy them and then inject funds into those assets so that they can start to generate revenue. That should be the model. And so for the privatization that we've seen that have worked, and there are quite a lot of them, that has actually been the model that they have adopted. And so I think that is why privatizing refineries at the moment hasn't actually worked, because they've had these challenges in the past. Now, if you also look back to even the history or the motivation for Dangote Refinery in the first place, it was actually because the refinery that was privatized under, I think, towards the tail end of the Obasanjo regime, was revoked under the Yar'Adua regime. And this was actually the basis for him saying, you know what, I will go and do this myself, because he actually had won the bid to manage one or two of those refineries. And so he eventually said, you know what, I will go and do mine myself. And this is what has given birth to Dangote Refinery. So again, we've practiced one model already. We've seen the government try to run this refinery over the years, and it has never worked. It's not working. They can't do it. One, they don't have the capacity to do it. Two, they don't have the funding to do it. So what you're seeing now is funds that are being appropriated from a very limited funding space that we have as a country. And then these funds are actually being squandered. So there is no point doing it again. You've mentioned the Ajaokuta Steel. It's the same thing. When you have government all around it, it just doesn't work. It will not work. You have to privatize it, but you have to privatize it the right way. That's why some of us have always advocated for a different kind of privatization. You have to privatize companies and provide clear mandates, clear KPIs. And one of your KPIs must require that privatized companies are listed on the stock exchange Nigeria. When you list privatized companies on the stock exchange, what you're essentially doing is you're providing a pathway for pure capital formation. Those companies can generate capital from a stock market. They are transparent because we can see what they are doing. You can see their revenues. You can see their expenses. You can see their board of directors. You can see their shareholders. You can see who really owns these companies. It gives them access to a global market, not just a Nigerian market. You also even give them access to a debt market. And so there is pure compliance all around the way. But when you privatize and you give it to one man who we don't know where he's getting his money from or who his backers are, then you start to have all these challenges.
Thank you, gentlemen. Last question, and we wrap it up. And I'm going to start now with Ugo so that we end with Hector. Fuel subsidy. Now, if you look at the dynamics of the market, you know, the landing cost and all of those economies, it seems that fuel in Nigeria ought to be charging a price more than what is going on. And then secondly, some of the Bretton Woods institutions, I think specifically IMF, has said that indeed the federal government has resumed the payment of subsidy. So I want to ask you, and I'm going to start with Ugo now, and then we go to Hector. Are we still paying subsidy or not? As an expert, you know, what's your view? And please don't dodge this. Don't dodge this question. Ugo, you first.
To be honest, there's nothing to dodge here. I think it's pretty clear. If you listen to the government, official commentary is that it's muted. And then if you listen to some aspect of the government, they will tell you there was no provision for fuel subsidy in the current year's budget. But we know that has always been the case. Fuel subsidy has always been through the NNPC. And the NNPC have always been the one that have subsidized fuel in the past. And I'm sure maybe Hector can provide more insights there. But if you ask me from my vantage point and from our own analytical standpoint, and based on the numbers that we've seen, and based on the people that we've spoken to who understand, the business of petroleum imports and pricing, they will tell you that there is no way categorically that fuel prices are not being subsidized today. There's no way. Of course, just like you mentioned, the World Bank has also alluded to that. So it is clear that fuel subsidy is being fuel is being subsidized today in Nigeria, despite the fact that we have not gotten any official confirmation yet. But like I just mentioned, I think all you need to do is follow the numbers. When you follow the numbers, I think you pretty have your answers, and there's just no point waiting for the government to come here and tell you. You know the answer already. It is being subsidized.
It is being subsidized. That's what I think too. But let's hear what Hector has to say. Hector, last word.
Follow the number. Just follow the numbers. The World Bank has said you'll be spending anywhere around 5.4, 5.3 trillion on subsidy. The government of the day can skirt around it all they want. But you see, you can't expect to import petroleum products and not incur costs. You're not when you import, you're not paying in Naira, mind you, you're paying in USD. Unfortunately, when you sell at the pump, you're selling in Naira. You have no control over the exchange rates. And the whole essence of setting up the PPPROA, the Petroleum Products Pricing and Regulatory Agency, was to guard against the volatility in international markets, that's of petroleum products pricing, to shield the consumers from that. But when you when you are being sworn in and you announce flippantly, I dare say, that subsidy is gone, without putting in place any measure to protect the consumer, then you've exposed Nigerians to that volatility in international pricing. You have no control over the international pricing mechanism. And ab initio, when we started discussing removal of petroleum subsidy under the Obasanjo administration, led by this gentleman of blessed memory, Chief Rashid Badamosi,
in Lagos,
made it very clear that rail line to be revamped. The storage terminals across the country will have to be revamped. The pipelines that take products to those storage terminals will have to be revamped. Subsidy removal was to be predicated on domestic refining, not import-dependent supplies. When you place subsidy removal on imports, you've killed industries, you've killed local businesses. Prices can only continue to go nuts. So if it's petroleum subsidy, it is back. It's on rice, and it can only go up. The Dangote refinery cannot solve the problem because the Dangote refinery will continue to pay for crude oil in USD. They are not going to pay for crude oil in Naira. The question you should be asking yourself is that in a period like this, how come the NNPC isn't allotting all of its 445,000 barrels a day to the Dangote refinery for domestic refining? The NNPC is the sole owner of the NPDC. The NPDC produces anywhere around 200,000 barrels. Why is it convenient to export crude oil when you have a facility like the Dangote refinery up and running? If you export refined petroleum products, you make more money than if you are exporting crude oil. So I told you earlier when I started my presentation that you have a group of persons who are benefiting from the status quo. And they will do everything within their power to maintain the status quo. So petroleum subsidy is back with us, and it will remain with us like white on rice.
Thank you so much, Mr. Hector Igbikwibo, the publisher of Sweet Quid Report, and also Ugochukwu Obichukwu, the publisher of Nairametrics. Thank you both for coming to Inside Sources.
Thanks for having me. Thank you. Thank you.
Thank you, gentlemen. And there you have it. Inside Sources. We'll be right back.